Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 4th of May, 2023. Thanks for showing up here again today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2462. We're going to jump right into it here. Real quick, I have to ask you this question just to get an idea. How many of you are following Convergent Trading's Twitter to get this sheet, or do you only see it here? In other words, how attached are you to this pre-market summary sheet for what's going on and what's ahead? Just let me know if it's something you'd like to keep seeing, or if it doesn't make a difference to you because you have other sources. Let me know as soon as you can. The overall market posture this morning is mild risk off, we do have Europe coming off. Europe, the strength is coming from energies. We had Shell reporting today, but overall, everything is just coming off. Shell came out today, Cardinal Health, Equinor, AP Moller, Maersk reported. Apparently, it's kind of a perfect storm ahead in that inventories are high, shipping rates are falling, and there's just less stuff to go around the world. So these guys really killed it, absolutely killed it when shipping rates were 10 to 15 times the rate they were before COVID. And now those rates have fallen back to where they were, and the guidance there is pretty poor. ConocoPhillips, Anheuser-Busch. After the close today, of course, this morning we got the ECB announcement, and the presser is going on right now. But it is the key release today is Apple. Apple announces after the close, AIG as well, but Apple is very closely watched. And then don't forget that tomorrow's non-farm payrolls and unemployment in the U.S. This is a key figure. So that's where we are. This morning, earnings continue to be in focus. Overall, though, the regional banks just taking a beating this morning. I forget which company it was. PacWest reported that the deposits were strong, that the uninsured deposits had plenty of liquidity to cover uninsured deposits. They had a very dovish look. They've been approached by various strategic partners. So this is great for a regional bank, but if you look at the regional banks across the board, they're just getting absolutely beat up. Part of what is contributing to the Russell remaining down as it has been for the last month and a half or so is that, again, U.S. jobs reports tomorrow. Fed indicates it might pause on further rate hikes. The Fed's conference yesterday didn't really yield as much new information as people had hoped. The key element is that they're prepared to look at pausing rate hikes. I want to remind you that the Fed has raised rates 500 basis points in about a year. 500 basis points, 5% in a year. So we're at 5 to 5.25% is the target rate now, and we're seeing the effect of that in economic data. The Chinese Caixin manufacturing PMI shows contraction in April, as did the MBS PMI before it. Challenger job cuts lower than previous. Initial jobless claims marginally higher. Again, PacWest has reportedly been approached by several potential partners and investors. TD Bank and First Horizon terminate the $13 billion merger. That's been going on a while. First Horizon taking a beating this morning as a result of that news. ICANN Enterprises plunged around 20% Wednesday after the Hindenburg report. And what's on deck for today is very light, very sparse. Again, we have the ECB press conference right now, so if you're trading European products or European currency pairs, pay attention. We do have the IV PMI out of Canada at 10 o'clock. We have natural gas at 10:30. And then we have the Bank of Canada's Governor McCallum at 105. And then this evening, we have the Cajun Services PMI expecting 58 there. The composite PMI expecting 55, both of those at 9:45 p.m. And the ES currently is in a multi-distribution profile, active price discovery in the overnight session. We did poke down. We'll talk about the ES in detail. Volume is excellent today, 277,000 contracts. The volume mode over the last 252 days is listed below the heading overnight statistics. It shows 280. We're at 277. The statistic is up to the open, which is 9:30 a.m. Eastern, 8:30 Eastern. So there's plenty of room there. So we're opening pretty strong in terms of volume. Inventory is 51% short, meaning 51% of that 278,000 has occurred below the prior close. And most importantly, the range is 42.5 points. 42.5 points. A pretty active overnight session. And we're likely to see some pretty good rotations today. The market, the S&P remains below the key 4,100, and more importantly, remains below yesterday's low, which was 4,105 even. 4,105 even. So that's what we've got coming into today. Seeing a little bit of a pop in Bitcoin, and crude holding steady. If you recall, yesterday it was down 3%. Put in a balance day, it seems to have found some traction from buyers in crude. It has advertised prices down enough to have found buyers now for crude. So the question is, does it start poking the other way, or is it going to pause here for more downside to find real legit buyers at lower prices? Gold and silver are higher today. Let's take a look at the market. Couple things to note from yesterday. We opened, so we had this drive down day on Tuesday, which actually came all the way back to close at or around the point of control. If you recall, I covered this yesterday. Tuesday made an excellent push down, gave us very early clues that initiative selling after the gap down, so we have a gap zone up there, that initiative selling after the gap down was strong, so we wanted to short, find a short somewhere, or wait for a short setup is what I should say. And then it extended the range down, the IB down. Remember, 41.10 was my target. It went to 41.0550. And then from there, we had an excess low from 41.0550, and then it started to climb. It had one time framing on the 30-minute back up to the IB low, where it found the point of control of the day, and it found the VWAP for the session in the mid of the session, and it closed there. So what we had on Tuesday was a market that had strong trend or strong price discovery, initiative behavior down, and then it found buyers, and it ended up coming back and finishing right in the middle of the range, right? So this sets up the potential, as we talked about yesterday, the potential for pushing to 41.53. So we're looking for it to push to 41.53 right here is a key test. And then 65, the beginning of where those single prints were, around 65 or so. That's what we were looking for yesterday. But also, because we had an initiative day down, it also gave us a conflicting indication that the 41.0550 was vulnerable. Remember, the market tends to move in when we have an impulse. An impulse is considered a 90th percentile rotation. In other words, a rotation that's much stronger than one standard deviation of what we would call normal. In general, and I ran statistics on this a long time ago. I mean, probably 7, 8 years ago or something, very painstakingly with a spreadsheet and a chart. Um, in general, when we have an impulse that fits very specific criteria, we tend to retest the impulse low, which in this case would be the 0550. So this is why I noted it yesterday that, hey, we had an impulse day down with a low of 0550, and then we tend to breach, not just test, but breach that low even by a tick. We anticipate breaching that low, so we would expect a breach of 0550. So what's the point here? The point is yesterday was a buffet of getting things done. Once the Fed kicked in, we ended up retesting the 53 magnet up above. We ended up closing the single prints into 65. We went to 67, maybe. We went to 67, I think, yesterday, and saw a clear excess at 67. So we closed the single prints, and then it served up the impulse low by going and taking out the 05, 41, 05, 50 by going to 41.05 even. So it took it out by 2 ticks, and it finished at the close. So these are important things in that yesterday did a great job cleaning up Tuesday's action. That's what yesterday did. It really was cleanup crew, and it took care of a lot of the poor structures above, except that we still have a gap zone or an external gap remaining open, but it cleaned up the upside pretty well. And then once it cleaned up the upside, it very proficiently went down to the prior low, and it gave us what? It gave us a neutral extreme down day. Okay? Gave us a neutral extreme down day, finishing right at the low, a neutral extreme down day. When that happens, at the top is a very significant reversal signal. We almost had that up here, but when it's happening in the middle of the range, it implies bearish continuation. So with a close like yesterday, we do expect the overnight session to take out that low and continue lower, which it did, because the overnight session, not only did it take out the 41.05 even, but it went to 40.7550. 40.7550 went all the way down here, and it puts into question this 40.88, the 40.68 low that we had from last week. And that's the next key test area right now. So yesterday we cleaned up above for the most part, didn't clean up the gap, and we finished weak despite some relatively dovish-ish comments from Jerome, or as I like to call him, Jeremy Powell, or J. Powell. Jerome Powell's comments were relatively dovish in that, they may be pumping the brakes and so on and so forth. The market still ended up selling. Assets were still sold, and then this morning we're opening right at the low of that big trend day up from last Thursday, I think. And it looks to me like there's quite a bit of overhead in the S&P. Now, we left single prints in the S&P into the 4130. The single prints start in the S&P at 4130.50 and 4130.50. And so there's a potential for the market to kind of walk itself back into that area, consolidate, and decide what to do next. So that's where we are. How much of that did you capture? Did you capture 100% of that, 80% of that, 50%, or am I speaking gibberish to you? If I gave you a quiz right now about what the narrative is and what the context is, what yesterday did versus the prior day versus the overall context, would you get 100% on that quiz, or would you get a failing grade in it because I'm going too fast and you're missing a lot of the baseline knowledge needed to understand all of that? Hopefully All of you understood what I'm talking about there. We'll see as the market opens up. So this is what we've got. This is very significant in that we have a neutral extreme down close, but look at what happened to value. Look at value. Point of control, point of control. What we have is a market that's really loving this, the last couple of days, it's really loving the 41.39 to 41.41 area. It's doing so in TPO charts, in classic market profile charts, but also it's doing so in our volume profile charts, which are more important to me on a day-to-day basis. Look at these white lines, those two white lines, this line here, this line here. That's the most traded price by volume, and you could see the overlap. So what we have is this MC point of control here at 41.53, very important. This is our key magnet in this area. This is a very, very important and attractive price for S&P traders. It's been accepted quite a bit. It's got a lot of volume in it. But then the day before, we finished around the 41.39-ish, 38-ish. And then yesterday, the point of control held. So we actually traded quite a bit of volume right where the prior session had the point of control settled, had the IB low, had VWAP, had all this crap, all in the same price. We traded quite a bit there yesterday, and then we ran away at the close to tag and take out the impulse down low. So what does that mean? Very cool, man. I could look at a chart too and see the same thing. What does this mean? This means that this is like a rubber band being pulled away from that 41.40 area. There's a rubber band stretching is what this is saying. It's a market that has vertically dropped, parabolically dropped on Tuesday. It's a market that has come quite a bit back. So the impulse down was, the 50% of the impulse down was exceeded to the upside, all the way up to 65, taking out 65, 67. And then we did another drop, and what we might see, and this is what I'm trying to drive at, we might see another one of these where we find an excess low, we find a base, and then we start one-time framing and walking back up again right into this area. What this market is saying is that all things being accounted for, all things being equal, all the information we have right now, 41.40 is value, 41.40 is around where I think I can do a lot of trading and I can justify buying or selling the S&P minis in those prices. That's what this is saying. So despite the fact that we're opening in a gap today, and it's very, very likely, and remember, you want to trade with momentum, not against it. Despite that, we expect, now that the overnight session, let's look at the overnight session real quick. There are a lot of clues. This is pretty interesting setup here today. So there we are again. Point of control, right? Markets running away on the close yesterday, pushing down after the close, pushing down and putting in that overnight low of 40.7550. And then it pushed from 40.7550, it ripped right up to 41.18. And this is the kind of action that I'm going to be concerned about today. And this morning, what we have is the overnight point of control, VWAP and mid, all in the extremely overtraded 4100 zone, the 40.99, 4100s where VWAP is, 40.97 is where the point of control is, and not the point of control, the mid is, and the point of control is around 40.97 as well. And we're opening out of range in balance this morning. So the expectation is we are likely to recheck the auction to the downside. So we're likely to dip down below 40.90, 40.88 or so, and then we are likely to see a rip. So the key trade for today, believe it or not, is a gap to settle trade. So this morning as it opens, I'm going to monitor to see how does the order flow go on the downside. If the order flow is such that we are hammering on the bid, but the bid's kind of strong, it's staying there, it's not pulling, it's not slipping through, it's not sliding through. If it's hammering on the bid and the bid is just coming back in, acting like water to a beach ball, you know, we're pushing down, the force is pushing down, the sellers are pushing down, and it just keeps popping up easily, then the trade would be a mean reversion trade or an outside in trade looking for 40.90 or so. If it takes out the overnight low, 40.80 or so, I'd love for it to take the overnight low and come right back into the overnight range. That would give me more room to the gap to settle. And we're looking for 41.05 to be tested and 41.0750 for a gap to settle trade. That's the primary trade. So the primary trade is that. Push down and then pop right back up for a gap to settle trade. The secondary is an open auction that squeezes up, gets, just doesn't have any sellers in it, squeezes up, gets to 05, breaches into yesterday's range and Tuesday's range. 05, 0550 gets the 07, consolidates there for a while, may have a run into the 41.18 overnight high, gives us the overnight stat, but at some point in the afternoon, I would expect this to roll over and then start making its way down. That would be scenario 2. Reason being that all things indicate, all action indicates that all of the buying has been sold, that we have exhausted buyers for now, that the market is perceiving danger or risk, a large risk overhang, and is not able to hold on to these higher prices. That's what the auction is screaming at us. That changes once we get above yesterday's high and we end the one-time framing down. That idea changes. But for now, the momentum is to the downside, and so we're looking to sell pushes. The ideal trade actually for today, believe it or not, is right up here. We'd want to come back into this point of control area, this resistance line right here in the 41.37, 38, something like that, 41.35. Remember 41.35? Right here. Remember 41.35? This zone here from which we bounced, fought, and then we finally fell through. The ideal situation is we get all the way up here and then roll back over just to clean up these single prints, roll back over into settlement, giving us a nice little trade. Although that sets us up for an inside day, it gives us a nice little, not an inside day, but it sets us up for closing on the inside. It gives us a nice little setup with pretty good distance. Remember, we came in talking about how the volume is pretty strong and the overnight range is pretty strong. This is the day you'd want to pay attention to the open. Okay, but we are opening in balance. Keep that in mind. The NASDAQ looks just about the same. Look at the NASDAQ. Same thing. Sold off, came back to the middle, point of control right there. Yesterday, pushed up, tried to clean up the top, tried to end the one-time framing down, could not, went all the way down, finished at the low, but look at where value is. So if you're looking at candlesticks, you're probably seeing some information, but the more important information is what's inside of the bar. And what's inside of the bar is that the NASDAQ really wants to come back to this 13,200 area. This is a magnet area, okay? And yesterday, and remember I talked about 13,080 in the NASDAQ I said we're likely to test the 13,080 over the next couple of days. Well, it did so in tonight's overnight session and kind of took care of that. The next base for the NASDAQ is right here. This key over underline at 13,010 in the NQ below here. We're likely to see a precipitous fall. And then if it comes back here, we may see a bounce on a first test. You can see very clearly how the NASDAQ has fought this area, 13,010, 012, something like that. So let's put that on here. Expecting a bounce there if we do fall. So pay close attention to this morning's open. I'll leave you with that. This has been a long one, but there was just a lot to cover here. Good luck, okay? Pay attention to risk. Never defend a trade. Be a good loser. Just let it go. If it's not working for you right away and it's not following what you imagine to be the plan, let the trade go. Good luck.